Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment markets to help better your portfolio. We've been getting a tremendous amount of email response, questions, and so forth on our radio show, especially about the pending, and I guess is a good way to put it, slowdown in the U.S. economy. A lot of indicators are basically flashing red, showing that the economy is obviously on a very weak growth projection. GDP numbers continue to come out obviously slow, and most of the numbers on the inflationary front obviously are higher than normal. As I've made repeated comments over the last year and a half, I expect this to be an extremely slow recovery out of this recession from the credit bubble, and it continues to show exactly that. I don't think we are headed necessarily at this point for a double dip recession, but we are always watching those indicators close. We're seeing some sell-off in some of the commodity based investments, which I still like on a long-term scenario, by the way. But I believe we're getting a little bit of a short-term pullback because of the strengthening dollar. When the dollar basically rallies, you get a little temporary pullback in commodity-based investments and also in the stock market, which is exactly what's playing to tune at this point. I believe this is going to be temporary in nature on the dollar positive, and I believe ultimately the dollar is going to roll back over and get weaker over the next couple, 2-3 years or longer. I still think the long-term trend for the dollar is down. I still believe the long-term trend for commodities will be higher, and I believe this will show investors an opportunity not only for gold but a lot of the commodity-based investments out there as an opportunity maybe to add some to your portfolio. I also believe that investors need to understand that you need to make sure that you are constantly watching your portfolio. If you're not doing that, make sure you have somebody that actually is managing your money, as we continue to bring in new clients to our firm and continue to get questions from our listeners, such as, Brian, I have an advisor, I thought he's actually managing my money. And it's real simple. Use our fiduciary questionnaire that's in our investor resource tab on our website. Make sure you really understand the role, the person you have. And I know I've repeated this a lot, but for a lot of people, there's that misconception out there. There's been an SEC study that shows investors really are kind of misinformed or really almost being fooled into really thinking that they're so-called advisors any more than a broker. If it's not a registered investment advisor under a registered investment advisory agreement in an advisory account, then it's only really a brokerage account. So you need to understand the difference, and it does make a big difference. So make sure you do understand that, and please use our fiduciary questionnaire. It's in our website, ResneyWealth.com, in the Investor Resource tab. Use it. If you go through those simple 12 questions, you'll know exactly who you're dealing with, or in the interview process, so you could find the right person whose job is really to manage your money instead of just selling you investments and really just acting as a broker with a title. That's important to your financial health and your financial wealth, of course. I continue again to get a lot of questions about the bond market, and I want to stress this strongly. Long-term bonds, in my opinion, and intermediate-term bonds of any sort, whether it's munis, government, or corporate, are a very, very, very risky asset at this point in time. I think if you own any kind of longer intermediate term bonds, you are setting yourself up, in my opinion, for really a roller coaster ride on the way down without the thrills on the way back up. Interest rates are at all-time lows. They can't really go much lower. Bond prices are at extremely high levels when rates slowly start going up because of the inflationary pressures we're seeing. Bond holders are going to get crushed, especially on the longer term bonds. So again, across the board, whether those are treasuries, whether those are munis or corporates, currently we own no long-term intermediate term exposure to bonds in our client portfolios. And the reason we don't is because we're actually managing the risk within our client portfolios. Make sure you have an investment strategy, make sure you have a disciplined buy strategy, and make sure that you have a disciplined sell strategy. Now, obviously, any of our recommendations or thoughts today can change at any moment as we continuously monitor the progress of the markets and exactly what's going on. I would recommend you do the same, and if you're not doing that, find a firm that actually manages your wealth without the conflicts of Wall Street. That would be Resney Wealth Management. Of course, give us a call. We'd love to help you with your portfolio in a manner that's prudent for you. Until a further update later this week on Thursday, have yourself an extremely profitable week, and visit my website, ResneyWealth.com, and check out that fiduciary questionnaire. You'll be glad you did. Have a great and prosperous day.